Well, I'm joined by Gary Booysen. He's from Rand Swiss. Thanks very much for joining us as always, Gary.
Good to be here.
Good stuff. Now, we hear that President Trump of the US has signed an executive order that seeks to limit or reduce the regulatory power of the DoddFrank Act, which is basically legislation that was created after the global financial crisis in order to ensure that it doesn't actually arise. So it seems as though he's quite keen to create that environment where there's so much risk that we could face that type of risk again. Your thoughts?
Yeah, well, it's interesting. So obviously we've seen, I think, the campaign promises by Donald Trump were along these lines, that he would unwind this act, put in place by Obama in 2010. So the DoddFrank Act, what it really does is it's a broad sweeping financial regulatory changes. So if you look at it, it's got everything from, the Volcker rule, which is limiting banks' power to trade on a proprietary basis. So, take speculative positions on their own balance sheets, all the way across to, outlining guidelines and creating regulatory agencies that help brokers treat their clients fairly. So, I mean, the headline that's gotten a lot of press at the moment is that he's actually repealing parts of the act that will insist that brokers treat their clients fairly. Now, why would you be repealing that? And obviously, there are always two sides to the coin as well. So, I mean, this act has also brought an incredible regulatory burden onto the banking sector in the US as well. Yes, it's got things about the tier 1 capital ratios for banks that are too big to fail, but essentially it has significantly increased the regulatory burden. So if he was to repeal portions or just change the act in some way, it could be seen as a benefit, and we're definitely seeing it in the financial prices. So the likes of JP Morgan, Goldman Sachs, really appreciating quite strongly in the last couple of months.
But why are we seeing a turnaround in the market? Why are we seeing this positive trend today?
So if you look at, we had obviously the US non-farm payrolls out on Friday as well, and it was a mixed number, but from our point of view, it was a fairly good number. So that the top line number, showed that the US was adding a lot of jobs. At the same time, it also showed that there was an increase in average hourly earnings. So the actual wage rate in the US is increasing as well, which leads us to believe that the Fed is going to be able to hike interest rates probably 3 times. And if that's the case, you should technically see a little bit of a firmer dollar. We're seeing a weakening dollar today, but essentially, I think the economic health of the US is pretty good at the moment, and possibly just the uncertainty around Trump's policies may be pulling that dollar back a little bit from its record highs.
Assuming everything then follows through as you suggest, that we're going to see more of a firmer dollar, Fed raising rates 3 times, and so on and so forth, the impact on the South African economy?
Again, it's very difficult to say because our economy is made up of multiple sections. I mean, we're very obviously resource-heavy economy. So technically, a weaker dollar does I suppose benefit us because you'll see rising commodity prices on the back of that. But the relationship is nowhere near that simple. If the US is strong and the US is recovering, and that in turn stimulates more international trade, that's a very positive thing for South Africa. Again, if you suddenly get Donald Trump pulling back, increasing tariff barriers, and really, I suppose that rise of populism that we're seeing across with the UK leaving the Eurozone. If you see that sort of populist movement continuing, you're going to see global trade under a lot of pressure. So, I mean, there's a lot of moving parts here, and it's very difficult to tell how, specific instances are going to affect our economy.
Last year, despite the fact that OPEC and non-OPEC countries decided to curb output at the beginning of this year, people were still saying there's too much of a glut in the market for oil prices to really elevate. But now we're seeing them flirting with $60 a barrel, and you throw Iran-US relations into the mix. Do you think that's going to be a reality post-60?
Yeah, I think we've shifted our whole oil estimate up to, our range is sort of to about $50 to $70 a barrel for 2017. And it's I mean, the oil market is a fascinating market. You look at what happened on the 30th of November last year with OPEC saying that they were going to take supply out of the market. I think most people didn't believe they were going to do it. It was traditional game theory. They were saying, well, if they can convince the market they're going to cut, everyone will sort of buy oil contracts, the oil price will elevate and they'll make supernormal profits. But what the latest data is actually shown that they haven't just cut; they've actually cut deeper than most people expected. So you're seeing Saudi Arabia taking out a lot of production. Iraq is the one that's really trailing, but Iran was really one of the sticking points because they said we are not going to impose any sort of cuts, or we're prepared to do a freeze, but anything more than that is essentially equivalent to self-imposed sanctions. So what you've got instead is Iran as one of the members, or at least one of the countries that was expected to allow output to increase. Now with sanctions on top of that, that's really going to curtail supply even more so than perhaps some of the 10 members that decided to cut were expecting. So you might suddenly, as you see a little bit of a supply side crunch. At the same time, though, you've got to factor into the US shale producers. And I mean, that's why on Wednesday we're going to get the energy numbers out of the US, which are going to be very, very interesting because that's going to show how much the US is managing to plug that gap left by the OPEC nations. So a lot to play for, a lot of uncertainty, but at this stage definitely looks like oil prices will be going higher.
Well, more to ask, but not enough time. We've run out of time. Thanks very much, Gary. Well, that was Gary Booysen. He's from Iran Swiss. After the break, Kendall has more news for you.